Good afternoon and welcome to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka. It has been a steady day, at least for the index, although we did come off the day's high. But Midcaps deserve mention because, some stories, individual stories weighed in heavy on the Nifty Midcap index, which is why after opening in the green, we saw the Midcap index in fact slipping into the red, and through the day, we've seen the same taking place, and the breadth of the market also turned in favor of the laggards. Of course, early cheer when it comes to the Supreme Court verdict on Trump's tariff that was announced on Friday evening, and then of course we had Trump retaliating with a 15% tariff. He hiked global tariffs to 15% on Saturday. But on paper, perhaps experts say it looks a little positive for India. But most of them have opined that the cheer over the India impact may be short-lived because, of course, given the fact that it gives rise to a lot of uncertainty going forward as well. But nevertheless, good day for the Nifty. We've clocked in a second straight day of gains. The Nifty, in fact, at the current juncture, it's above that 25,700 mark. 25,770 or so, that was the high point of the day. Since then, we did come off, but post 2 o'clock, we saw a sudden pop as well, which is why the Nifty is inching towards the high point of the day. But, the high of 25,770 or 771 was made right at the start of the trading session. Post that, we did drift down a bit and came off the day's high. But as of now, we are trying to, go back to those levels of 25,770. Or thereabouts. Let's just quickly take a look at what's happening in the rest of the market. As I mentioned, the mid-cap index continues to be in the red, down 0.5% at the current juncture. The Nifty Bank index is also out of favor, but it has edged back into the green. The breadth of the market is slightly skewed in favor of laggards. 1435 advances to 1548 declines. Sectorally, the picture is pretty much the same that as has been the case in the last few days. IT remains a big laggard. We had a Jefferies note wherein it has downgraded as many as 6 IT companies, and the pain is clearly visible. The IT index is down another 1.5%. Last 4 days, we've seen the IT index under selling pressure. So yes, it is a 4th straight day of losses when it comes to the IT index. We did see some pop during the AI week, but that seems to have faded away as of now. PSU banks, they have been hogging the limelight, and that has been the top sectoral gainer in the market for the last few trading sessions, and nothing has changed on that front as well. Autos are among the gainers, but FMCG staged a good comeback today. That index is up 0.7%. Pharma, banks, as I mentioned, are also in the green. Metals, real estate and IT, these are the 3 indices that are out of favor. Quickly take a look at some of the individual movers before we bring on board our guests for today. Adani Ports, that's the top index mover, up 3%. You have some of these BFSI names like Kotak Mahindra Bank, in fact, up 2%. Axis Bank is also up 1.5%. You have some life insurers, HDFC Life and SBI Life, they're doing well. Ultratech Cement is also doing well, and as you know, the FMCG pack is in the green. Nestle from the FMCG basket is up somewhere around 1.5%. Tata Consumer as well, almost 1.5% gains coming in there. In terms of the auto movers, you have the likes of Eicher Motors, M&M, they are hogging the limelight. Bajaj Auto also doing well. From the PSU banking lot, SBI is up 1%. You have some industrials like L&T doing well, Reliance Industries as well, providing support to the market, up in excess of 0.5%. Let's take a look at some of the laggards as well. Top 3 names, in fact, the top 3 laggards are from the IT pack, the likes of Infosys, Wipro, Tech Mahindra. Although CLSA has a constructive view on Tech Mahindra, but that stock is also under pressure along with the other IT names. Hindalco from the metal basket down 2%. Cipla, there's been some setback in terms of its Greek unit. So that stock is down 1%. Trent, that's again down 1%. You have Eternal extending losses, that stock is down 0.5%. ITC, although the FMCG index is gaining, ITC is trading in the red. So all in all, the texture of the market is fairly mixed. Of course, it's the individual stories on the mid-cap index that's hurting sentiment in the broader end of the market, with the likes of UPL That, of course, is the story of the day, so to say. The street has given a thumbs down to its restructuring plan. That stock was down in excess of 8 to 9%. And of course, banking names like AU Small and IDFC First on the back of the chances of a fraud, a 590 crore rupee alleged fraud at IDFC First. That's denting sentiment when it comes to some of these names, and all of these names are on the mid-cap index, which is why you're seeing the mid-cap index down by 0.5% or thereabouts. But on that note, let's bring on board our guest for today. Joining me is Anuj Badjate, the Managing Director at Badjate Stock and Shares. Anuj, welcome to Moneycontrol. First conversation with you. You're coming to us for the first time. So welcome. But, let me first get your thoughts on the market. Have you turned more constructive after the budget, after the India-US deal? Although, the latest developments have led to, have given rise to more uncertainty, right? How do you read into this 15% global tariff, and how does it really impact? What's your read through? Would you say that it's positive for India, or how do you really read into this?
Thank you, Nandita, and a very good afternoon to you. Thank you for inviting me to share my thoughts with the larger audience. And also congratulations to Moneycontrol team for doing a wonderful job of spreading knowledge and information to those who are concerned and are investors in the Indian markets. To me, the latest US courts turning down the tariff as illegal imposed by the president looks like very insignificant, more specifically in context of India. Because you have a uniform, what I hear is you have a uniform tariff now all across the globe. So this does not throw open any new opportunities for India to do business with US, nor does it dent the conventional and the existing opportunities whereby we were exporting goods and services to America. One thing does concern me is that if in case China comes parallel to India in terms of duties, there may be certain amount of additional competition on new products which we may face from China. This is and for the Indian markets, we are back to square one where we were prior to the tariff era, and certainly it looks to me like this will have inflation going up in US. For the US consumers, goods and services will become a little more expensive.
Okay, so no big positive as such for India. But what's your thesis when it comes to our own markets here on? Of course, we did see sentiment turning around post that announcement of India-US trade deal. Do you think that gets derailed again? Do you think sentiment takes a turn again?
I think our policymakers will evaluate whether what is more beneficial for the country, and then they will take their stands out. But certainly a uniform tariff all across the globe is not a very exciting news for India. If there is a differential tariff to different countries, it will certainly open a lot of opportunities for India in days to come, whereby we can ramp up our exports to US. Markets have welcomed the court's decision, but markets have welcomed the court's decision. But the chair, I think we are yet to see a follow-up. Let's see in next 1 or 2 days, how does the markets accept this verdict from the US courts?
Okay, so we'll have to wait for another 2-3 days to see how this really gets digested by the market. But in terms of a portfolio strategy, what should one really do in face of all this uncertainty? Should one stick to domestic oriented themes rather than looking at export oriented themes? Because we did see a lot of traction returning to textile stocks, aquaculture stocks, some of these gems jewelry stocks. What happens now?
Yeah, so for the portfolios, I would say that we are more or less certain that we are still in the ongoing bull market. India is still far away from topping out. The situation that we are facing in last 15 months is primarily a correction and a consolidation phase in the ongoing bull market. What makes our investors impatient is, especially in last 3, 4 years, the rally has been one way, and whenever there have been corrections, they were bought into and the corrections were short-lived. So the number of demat accounts that got added in the last 4 years, they have not seen longish phases of corrections or consolidation. So that is making our investors impatient.
That's
Uh,
correct.
yeah. So, but markets move in cycles, and this phase of consolidation and correction is really healthy, and it will create space for new opportunities in the market where these investors will be able to hunt and make money in the days to come. As far as the end of consolidation or correction phase is concerned, I'm sure till the time of this uncertainty, the markets will behave. They will be a little sideways with bouts of sharp movements upwards and downwards as and when the news follow. But the policy stability as well as the geopolitical stability is must for markets to take a big leap forward.
Okay, markets will remain sideways for some time to come. But where does one really spot opportunities in terms of the large cap versus mid cap debate? Where are you at right now? Last year, we saw the broader markets underperforming benchmarks, and of course, on the whole, if you look at how Indian markets have fared vis-a-vis global peers, we were gross underperformers. This year, what does it look like? And do you suggest sticking to the comfort of large caps or looking at stories in the mid cap within the mid cap universe? What's your entire thesis here?
So all my 33 years of experience in the market, I've been a little adventurous and prefer playing from out of the crease to generate the extra alpha. And I would still suggest to be with the small caps and mid caps. If you see, the markets have tried to actually surpass the previous high 2 times, 3 times in the recent past. But due to certain announcements, news flows that are negative in short term, the markets have not been able to actually breach the previous high. But to me, it looks like the consolidation and the required correction has happened in last 15 months. A larger part of the mid cap and the small caps have corrected to a reasonable level. Now the trick is to identify the right or spot the right sectors and the stocks where again once the small caps and mid caps start moving, a larger alpha can be generated. I don't think that part is too far. We
Okay.
are seems like we are nearing the end of consolidation phase in the small caps and mid caps, and the last 15 months sharp correction has thrown open a lot of opportunities for good investors to accumulate these stocks.
Sure. Where do you really look for alpha in the broader market now? Since you say that most of the correction and consolidation may be out of the way and nearing its end, where should one really look for alpha within the broader end of the market?
So very obvious choices. One is the PSU banks. They are demonstrating as if they are in a secular move in the market. And I think though it's not the growth story, it's the cleaning up of the balance sheets that has happened in last 10 years in the PSU banks, as well as the relative valuation theory.
Hmm.
Uh, the investors who've taken a hit in last 12 to 15 months are a little fearful of chasing growth as of now. So what they are looking at, reasonable or undervaluation, and that is where PSU banks benefit from. They've been grossly undervalued, available at deep discounts to their private peers. So one is that, and
Hmm.
select PSCs also, we see a lot of traction there in times to come. In spite of the markets being in sideways movement, we feel that a lot of money can be made there. The second preferred choice, if you
Hmm.
wish to
You know,
listen to
just one more
that, is
question.
yeah.
Sure, sure. Go on. Go on, go on.
So the second preferred choice and the third preferred choice. Second is the defense sector, which was very much talked about and participated very strongly in the previous rally, but saw a sharp correction time-wise as well as price-wise in last 12 to 15 months. Primarily because of the geopolitical disturbance, the demand for the products is not going to slow down. The Atmanirbhar Bharat push is actually motivating and seeing a lot of changes on the ground. And I will not be surprised if we have two, three, four, five defense players from India becoming global giants in the coming 5 years. But again, having said that, investors need to be patient because defense is such a sector that nothing happens overnight. The development to the approval and then the order and the export, all this will take 2 years, 3 years. But certainly there is visibility on the top line growth for coming 5, 10 years in this sector.
Hmm. Okay, so these are some of the pockets: PSU banks, defense, etc. But one thing I want to get your thoughts on. You must have seen the news about IDFC First Bank, AU Small Bank. Potential 590 crore rupee fraud, and forensic audit is on. Although the RBI has said that there is no systemic issue here. Of course, these are all isolated cases. But would that dent sentiment when it comes to banks at all, or would that just open up opportunity for PSU banks as such? Because these are smaller private banking names that have been on the radar. So, what's your own assessment when it comes to these kind of incidents?
So Indian investors are very well accustomed to getting these shockers in the system. Uh, and
Hmm.
I think if you look at the larger picture, the size of the banking system in the country is too big to actually be dented by a 590 crore fraud in one of the banks. On the contrary, leave aside it having impact on the entire sector, that the confidence is visible in today's prices of the PSU bank stocks also. I think such incidents open opportunities
Hmm.
for investors to get into these stocks because the DNA of IDFC First Bank has been very clean and very efficient. I think the 20% fall today offered
Hmm.
a great opportunity for investors who missed the bus last time, and they can take position from the
Hmm.
very short term perspective also and very long term perspective also.
Okay, that's the view. Of course, this fall in IDFC First Bank offers up an opportunity. But with that, I would like to thank you for joining me and discussing all these things. Of course, I look forward to more interactions as well. Of course, today, due to paucity of time, I won't be able to continue with this discussion. But thanks a lot for joining in, and look forward to more interactions in the future as well. Thank you.
Thank you very much, and my pleasure, and look forward to more such interactions.
Thanks a lot. On that note, just about 4 or 5 minutes left for the markets to shut shop for the day. Let me bring on board Rajesh Bhosale, Senior Technical and Derivative Analyst at Angel One. Rajesh, very quickly, just about 4 minutes left. We have cleared that 25,700 mark today, and looks like we are poised to end above that level as well. How does it look like for tomorrow? And any BTST strategies for our investors and traders, for our viewers rather?
So yeah, so I'll quickly give my output. So if you see, yeah, I mean, a very strong closing, but overall the market remains range bound. Uh, 25,850 to 25,900 would be very important tomorrow. That is on the monthly expiry, but we remain positive. Any dip would be an opportunity. Two stocks that are looking positive. One is Lupin, very strong range breakout. It is closing at its highest point of expiry. So Lupin can be bought with a stop loss of around 2190, and in the near term, targets can be kept as around 2310. One more counter that is looking good is Tata Consumer. Last week there was a strong traction from the 200 DMA, and after 2 days of consolidation, we are seeing a flag breakout. So Tata Consumer looking good with a stop loss of 1148. It can be bought with for the targets of 1230.
Okay, Tata Consumer and Lupin, BTST strategies from Rajesh, and of course 25,850, 25,900 on the upside will be crucial to watch out for tomorrow. But for today, we are poised to end above that 25,700 mark, although broader end of the markets aren't looking all that great. The likes of IDFC First, Bank, UPL, all of these stocks have seen very, very sharp cuts today, and that is something that is weighing in on the mid-cap index, which is why the breadth of the market is also negative. But quickly talk about IDFC First Bank, Rajesh, a 20% plunge today. I was just talking to our funda guest today, Anuj Badjate, and he said that IDFC First Bank fundamentally looks pretty strong, and this is an isolated incident, and a 20% cut in fact opens up an opportunity to buy. On the technical side, how would you look at the 20% plunge? In fact, I think it did see a lot of block deals. Post that, it recovered from the day's low, but still down 16%. Technically, is there a major breakdown, or is this an opportunity to buy?
See, long term, it may be good due to its price level, but from the technical perspective, the short term, there is a dent, and maybe we may not see that performance. So when we consider short term, we need positive momentum. So that is not there, and the kind of sell off is there, we may see further downside. So we would suggest to avoid catching the falling knife for now. It may slip towards 65, 62 levels. There we will reassess if there is any base formation reversal, and if there is, then we can attempt. But for now, we'll wait and watch.
Okay, not really advisable to catch a falling knife. Wait and watch. That's the approach on an IDFC First Bank after a 16% plunge after that, fraud, 590 crore fraud that. Of course, the bank is investigating, and it has also suspended a few employees on the back of that. But let's take stock of the market close. Hold that thought. Rajesh will come and talk about various other stocks that were in focus today. But take a look at the Nifty. We have shut shop just above that 25,700 mark. Second straight day of gains coming through. 25,770 or so. That was the high point of the day. I think 25,771. Yes. We were looking to clock in the 25,800 mark. Didn't really happen today, but 25,800, 850 to 25,900 will be crucial to watch out for tomorrow. But nevertheless, a good day of trade coming in amid Trump's tariff tantrums. Of course, lots of discussions, taking place on Moneycontrol as well on whether the 15% global tariff, how does it really stack up for India. We've had a lot of articles on our website as well, so you can log on to moneycontrol.com and really see what experts are saying about how India stands to benefit, or how it really, what really it matters for India. That's something that you can log on to Moneycontrol and read out over there. But aside of that, look at the mid-cap index. Quite a few news-based reactions on stock prices, which impacted the mid-cap index that ended the day in the red, down by 0.5% or thereabouts. Breadth of the market was largely even Stevens, but skewed in favor of the laggards. 1400 advances to 1590 declines. Sectorally, IT continues to be a laggard. Fourth straight day of losses coming in, over 1% cut on the IT pack. Real estate was another one that was out of favor. Aside of that, you had metals also giving up gains and ending the day in the red. But PSU banks continue to do well. The PSU bank index was up 1.5%. Autos, FMCG, pharma, these were some of the sectors that did well. So largely, only 3 sectors in the red for the day. Aside of that, all the other sectors managed to do well. Just want to point out some of the laggards on the index. Hindalco from the metal pack was under pressure. Some of these technology names on the back of the Jeffries downgrade. We saw Infosys, Wipro, Tech Mahindra, all of them ending the red. So did HCL Tech. Although the FMCG index was up, ITC was down. Some of these quick commerce names continue to feel the heat. Eternal down another 0.5%. Tata Steel was also down from the metal pack. On the flip side, banks and financial stocks were doing well today. Kotak Mahindra Bank features on the gainers list, so does Axis Bank. You had SBI also gaining 0.5% or so, and some of these insurers like HDFC Life, SBI Life were also among the gainers. Nestle India from the FMCG pack, Ultratech Cement, Grasim, some of the cement names were also doing well. But I really want to point out some of the mid-cap movers, because it was a mid-cap index that was sulking despite a steady day of trade for the headline indices. Take stock of some of the laggards. IDFC Bank settled lower by 16%. We just discussed that. No point in catching a falling knife just yet. Steer clear, wait and watch. That's the approach on IDFC first, according to technical experts. UPL, that restructuring that the company announced, Street gave it a thumbs down. The stock was down 15%. Godfrey Phillips saw good gains over the last 4-5 sessions, but today down in double digits, 11.5% down on that stock. AU Small, along with IDFC First, on the back of alleged fraud, that was also down 6%. Dixon Technologies was down another 4%. Latent Few, and of course all these mid-cap IT names were also under pressure, the likes of Coforge on the Nifty 500 laggards list. On the flip side, what did well was Newland Labs, that was up 8%. Blue Jet, that stock was up 10%. BLS International, that was up 5%. Jindal Stainless up 5%. You had Metropolis Health, OneSource, Finolex Cables, Trident, CCL Products, and some of the mid-cap names, Indian banks, etc., were also doing well in today's session. But let's talk about UPL then. Thumbs down for that merger, Rajesh. It will be merging its global and Indian crop protection business. The street didn't really like the scheme of arrangement. The stock was down in excess of 14% or so. How are you looking at the stock, and what's the trade on this particular stock going forward?
Yeah, so last week the closing was very good, but today's price action has erased all the gains seen in the last couple of months. In fact, on the technical perspective, we are seeing a bearish island reversal, and on a single day, prices have slipped below all short-term moving averages. It has also broken below its last couple of months low. So, I mean, overall chart perspective looks very weak. Possibly the stock is headed toward 610 to 600 levels. So as of now, further weakness is expected. So fresh longs for now should be avoided.
Okay, fresh longs for UPL should be avoided. Of course, in the run-up to this restructuring, we had seen good gains come through on UPL, but today's move seems to have erased all of that. But IT continues to be in focus, right? Another down day, 4th straight day of losses. But during the AI week, we did see some bit of buying emerging, but that, of course, kind of fizzled out. And today we had Jeffries that reported, that came out with a report on IT, and it had said that AI may structurally shift IT business towards consulting and implementation, and managed services is one segment that may shrink. And of course, the shift will require changes in talent and operating models as well. They've downgraded as many as 6 IT companies, right? They have downgraded. Infosys to hold target price has been cut quite significantly to 1290 from 1880. HCL Tech has been downgraded to hold, target price has been cut to 1390 from 1885. Emphasis from mid-cap IT has been downgraded to hold, target price has been cut to 2450 from 3410. almost 1,000 rupees cut on the target price. TCS has been downgraded to underperform, and the target price has also been cut quite significantly here, 2350 from 3,485. Hexaware Tech is the other one that has been downgraded, and here the target price has been cut by 200 rupees to 460. On the other hand, you have CLSA that has maintained a constructive outlook on Tech Mahindra. They've maintained an outperform rating. Target price is at 1810. And of course, it says that AI has been seen as a net positive for volumes and potential margin lever. And it is, of course, the company is likely to partner with foundation model firms like OpenAI and Anthropic. But nevertheless, we saw fresh shorts within the IT space on the likes of Emphasis, Infosys, Persistent, etc. It's been a topsy-turvy ride for IT names. Some traction was seen during the AI week, as I mentioned earlier, but completely fizzled out once again. And now we saw fresh shorts in some of these names as well. Your thoughts on how one should approach this space?
Yeah, so few sessions back there was definitely some bounce, but that bounce got sold into. So now this space is now acting like a sell and bounce kind of candidate. And if we checks the long-term charts like weekly and monthly, we can see a formation of head and shoulder pattern. So further weakness is expected in the near term. So we'll have a wait and watch in this space. The 2023 lows for the Nifty IT is placed around 30,000. That acted as a base for the rally towards rally in the next couple of years. So we'll wait for prices to retest those levels. Once it comes around 30,000 Nifty IT, then we'll reassess good quality counters which will show bottoming out indication, and then we'll add. For now, we'll have a wait and watch approach.
Okay, we have a wait and watch approach on IT as well. But another pocket that was in focus today was the entire defense pack, right? And HAL in particular. Reports suggested that the Indian Air Force has grounded the entire fleet of Tejas light combat aircraft days after one of the jets sustained major damage to the airframe after overshooting the runway, at a frontline airbase following a suspected brake failure. Now, sources suggest that Tejas had sustained major damage to its airframe in the incident, which of course took place earlier this month. And following the incident, the IAF grounded the entire fleet of around 30 single-seat Tejas jets to carry out an extensive technical scrutiny. The pilot, however, had ejected safely after the incident. But HAL did respond. They've said that there was no reported crash and it was a minor technical incident on ground. The stock did recover 1% from the day's low, but it did weigh in on the entire defense pack, if you see. Friday, we saw very, very good gains come through, of course, amid all the noise around US-Iran and, the geopolitical situation really. We saw good buying traction. But today's dip in all of these names like HAL, BEL, do you think this is a good opportunity to get in after the kind of up move they saw last week?
So for HL, we'll have a wait and watch approach because this counter as well saw a bounce back, but precisely after testing levels of around 20 EMA, it is slipping lower. So a lower top, lower bottom kind of structure is visible on the charts. So we'll wait until prices rebounds above 4,300. This stock is likely to remain under pressure. But having said that, for BL, the chart structure seems very attractive. It's in a consolidation phase. Already there is a strong breakout on the weekly chart, and now it's consolidating above 20 EMA. So if one has to enter one counter, BL looks good. If positions are held for a couple of months, we are expecting a move towards the 480 levels. So BL looks attractive, but for HL, we'll wait for prices to cross above 40 to 50 levels. Once that is crossed, one can initiate long. But for now, wait and watch approach should be there.
Okay. BL, of course, that stock is looking attractive. Chartically from the defense pack. But one stock that deserves mention is Mopen Labs. It has bagged an 825 crore rupees CDMO deal. The stock surged 15% today, and in a matter of 1 month, the stock is up 30 to 35%. But it's still, just coming off its 52-week lows of 33.5. Is this breakout that the stock has seen over the next month or so, do you expect it to extend, and does it look like the stock is heading towards 50-55 anytime soon?
So yeah, strong formation in today's session. Possibly the stock can move towards the levels of 52. Reason being, in the previous bounce, RSI was struggling to cross above 60, but today RSI has also breached above 60. So there is a momentum shift as well. RSI's prices have crossed above 89 EMA after October. So this is a strong indication. Possibly first 52, 54 level should be seen, and as long the levels of 40 are, I mean, the bullish gap left today around 40 is held, one can continue to hold long in this counter.
Okay, continue to hold longs in a Morpen Labs. Another one, you could call it a momentum stock as well, DE Development. Stock has extended its gains for a second straight day. It has bagged multiple orders across the last 2 days, secured a contract worth 173 crore rupees. And the last two trading sessions, we've seen the stock rally 30%. Last 1 month, it's up almost 50%. Should one chase the momentum here in this stock?
So from the morning highs, it has come down a bit, but overall chart structure remains positive. But for fresh longs, I'll suggest wait for a dip. If it dips back towards 240 levels, that would be ideal. On the high side, today's high coincides with the golden retracement of the fall seen from the July swing high. So 280 would be the immediate targets. Buying around 240 would be suggested. Once 280 is crossed, then possibly 320 would be expected. So as of now, consider buying on dip at current levels would be avoid.
Okay. Consider buying on dips at current levels. It's an avoid. Some stocks in the FMCG pack saw some traction today. The index itself was in the green today, but the FMCG pack has been muted, hasn't really been able to fire up. Anything that you like here, either from the large cap staple basket, or more rural focused plays like Marico, Dabur. What do you prefer?
So we prefer two counters from this space. Definitely, Nestle remains our top pick. In the last two sessions, the prices have seen strong traction, and some base formation is visible around the 1275 level. So with a stop loss of 1275, Nestle can be bought. Immediately, we expect the stock to move towards 1350, and beyond 1350, the stock can move towards the levels of 1500 levels. The second counter that we like, we highlighted during the start of the show, that is Tata Consumer. Already, the stock has seen rally from the last week, and today we have seen a flag breakout. So Tata Consumer can also be bought in the near term for a targets of around 1230 levels.
Okay, all right. Tata Consumer and Nestle, these are the two stocks looking attractive from the FMCG basket. But we did see good traction come through for the cigarette makers, right? Godfrey Phillips, ITC, they saw good traction last week, after the price hikes. But after 4 days, or after a 5-day up move, we saw Godfrey Phillips ending in the red, and so is the case with ITC. Although the FMCG index was up, the stock of ITC ended the day in the red. How would you look at some of these names, especially the likes of Godfrey Phillips, ITC, etc.?
So if we see Godfrey, Phillips saw a sharp move, and so did the correction was sharp today. It precisely took a resistance on the 200 DMA. So for Godfrey Phillips, we'll have a wait and watch approach until it crosses about 2630. The stock is likely to consolidate in a negative bias. But if we see ITC, I mean, overall, some kind of base formation is definitely there on the weekly and monthly charts. This being a prominent frontline counter, we would suggest buying on dip. If we see bottom or base formation is visible around 315 to 310 levels, and in the near term, the stock can bounce towards the levels of around 350 to 360. But due to current conditions, I mean, it may take time, but with a period of around 6 to 8 months, the stock can move towards the levels of 360.
Okay, that's the level to watch out for on an ITC, and that's the view on some of these cigarette makers, the likes of Godfrey, Phillips, etc. But there were quite a few volume-led movers today as well, the likes of Aegis Vopak, BLS International saw very good moves as well. Any thoughts on how these should be traded?
BLS did saw some strong traction, but from the morning highs, it has come off. We'll wait for prices to cross about 301 because that also coincide with the Feb swing high. Once 301 is crossed, then possibly the stock can have a 7 to 8% move towards the 330 levels. So we'll wait for prices to cross 301 for BLS International.
Okay, that's about BLS International. But want to get in your thoughts on a NetWeb as well. The stock has seen very, very good traction. Of course, it is one of those data center plays. But today, of course, it was down somewhere around 2.5% or so. But from a medium term perspective, how would you look at NetWeb? Is it a good time to enter?
So yeah, a very good time to enter. Today it was down, but last week there was strong traction. In fact, last July there was a strong breakout. Prices recently saw correction towards that breakout levels. Last week there was a bullish engulfing on the support levels, and based on this formation, we expect price to move back towards the levels of 4350 to 4400. So it will take a time like 6 months to 8 months. But with that time horizon, one can buy this counter with a stop loss placed below 3200 levels.
Okay, good time to enter. Stop loss placed at 3200 levels. That's one thing that you should watch out for. I want to get your thoughts on some of these export-oriented plays as well, especially a Gokul Das Exports. Opened the day in the green, but of course, uncertainty with regards to how the tariff situation will really pan out. Global tariff of 15%. How India stands to benefit here on. What is the kind of read through it will be for India. That still needs to be studied properly, right? So I think another 6% cut on shares of a Gokul Das Exports. Especially after the India-US trade deal announcement, we saw very good traction. Last 1 month or so, we've seen the stock gain 30%. Is it a sell on rise candidate now, especially in wake of all this uncertainty? Chartically, how are you viewing today's move? And of course, even the last 5 days, the stock has shed nearly 10%.
So if you see during the start of the Feb month, when there was talk on US-India trade deal, there was a strong gap up, and then post that prices are holding on to that gap. So a positive momentum is definitely there, but it's not holding on to its higher level. So for fresh entry, prices need to cross 820. Once 820 is crossed, possibly 950 can be expected. So as of now, fresh long should be avoided, but those who are having position can hold on to it with a stop loss somewhere around 700. But for fresh long, it needs to cross 820 levels.
Okay, look at fresh longs on Gokul Das only once it crosses the 820 level. We spoke about specific banking names that were in focus, the likes of IDFC, AU, etc. But let's also talk about the PSU banking names like Indian Bank, Union Bank, PNB. All of these saw very good traction. In fact, the story has been PSU banks, right? Because this index has been outperforming the market for quite some time. What do you like here? Do you like any of the names that I mentioned just now? Union Bank, Indian Bank, PNB. And if you like any of these, what would be the levels to watch out for there?
So yeah, Indian Bank and Union Bank, we have a bit on this both this counter. In fact, PSU basket as a whole look good. Indian Bank, if we see, it was in a consolidation mode since December to Feb, and last week there was a breakout from this couple of months of consolidation. In the near term, we expect the move to it to move towards the levels of around 1100, and the breakout levels around last week around 930, and it dip towards it should can be bought. So buy on dip towards 930 for a near term targets of around 1100 to 1200. Along with Indian Bank, we are also liking Union Bank. If we see the larger degree time frame charts, weekly and monthly, we are seeing a long consolidation breakout, and possibly from here onwards, the stock can move towards the levels of around 235 to 240. So this is also a counter which we are very bullish. Also, this would be a buy on dip. Somewhere around 190 to 188 seems to be a strong support, and dip towards it can be bought.
Okay, that's about some of these PSU banking names. One more chart that I want to bring to your notice is Bharti Airtel. Had a good run last year, but this year so far it hasn't really been able to really give good returns. If you look at the stock on a YTD basis, it's down somewhere around 5-6%. Is it a good time to look at this stock? And it's sub 2000 levels right now. With the next 1 to 2 week perspective, what is the kind of level you should be watching out for, and is this worth a trade now?
Yeah, I mean, it has corrected to its long-term supports. If we see, it's now hovering around its 200 DMA. So ideally, any further dip towards 1940 would be a great opportunity to add. From a momentum play, prices needs to cross above 20,000, 2050. Once 2050 is crossed, then there can be a move back towards its all-time high of 2175. So buy on dip towards its long-term support of 200 DMA around 1940, or for momentum play, wait for prices to cross above 2050.
Okay, that's about Bharti Airtel 2050. That's a crucial level to watch out for. Last but not the least, Cipla was one stock that was under pressure today on the back of news flow. There's been some setback for its Greek unit. Its Greek unit has been designated as official action indicated by the US FDA. The stock was down somewhere around 1% or so, but even on a YTD basis, if you look at the stock, it has shed somewhere around 10-11% or so. Within the large cap pharma names, what is the trade or what is the strategy like right now?
Since November, this stock has been under pressure and has fallen sharply from the 1500 levels. Again, we are seeing fresh breakdown, and this stock is likely to remain under pressure. So we'll suggest avoid on this counter. But as compared to that, Lupin looks very strong, as highlighted. It's trading around its highest point of this expiry, and from the expiry point of view, strong rollovers are visible, long rollovers are visible on the Lupin. So Lupin can be bought from the next expiry point of view for the March series. We expect the move towards the levels of 2350 to 2400. So as compared to Cipla, Lupin looks very attractive for us.
Okay, Lupin, I think you had flagged off even as your BTSC strategy, if I'm not mistaken, that you like Lupin from the pharma pack. But very quickly, any thoughts on some of these EMS players like Dixon Tech? Once again, the stock was under pressure today.
I mean, we'll again have a cautious view on this space, because from the futures front, if we see short rollovers are visible. So, I mean, until it crosses its key moving averages like 50 EMA, that is around 12,000, the stock is likely to remain under pressure. Once 12,000 is crossed, we can see a higher top kind of structure. But until that is not happening, we'll have a wait and watch approach. On the downside, 1900, 9900 seems to be the immediate support, which we sense that can be retested in the next few sessions.
Okay, that's the view on Dixon. Wait and watch approach here as well. But with that, Rajesh, would like to thank you for taking out time and joining in this afternoon. Always a pleasure, and I look forward to more interactions as we go forward as well. Have a great evening, and we'll see you soon with the markets once again. Thanks a lot for joining in this afternoon. Well, that was the market for you today. We had a mixed close, so to say. The Nifty ended above that 25,700 level, but individual stories really weighed in on the Nifty Midcap Index, which ended lower by about 0.5% or thereabouts. But a second straight day of gains coming through for the Lal Street, at least when it comes to the benchmarks. And as our technical experts pointed out, 25,850 to 25,900 on the upside will be crucial to watch out for. And don't forget, tomorrow is the monthly FNO expiry on the Nifty as well. So perhaps it could be a bit of a choppy ride tomorrow. But with that, completely timed out on this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Moneycontrol for all your other news and updates, and we'll see you with the markets tomorrow morning at 8:30 a.m. with opening bell. So don't forget to tune in for that. Have a great evening. Thank you.